Mm-hmm. Yes. What are the type of businesses we discussed last week? Yes. Okay. Barry Francis, what are the types of businesses we discussed last week? Barry Francis. Okay, let me go to Michael AJ.
So we looked at sole proprietorship.
Sole proprietorship. What did we say is sole proprietorship?
Oh, it is a business model whereby, business decisions rest with an individual. And
Okay.
because the business decision resides with him, at any point in time he wants to make a decision, he doesn't need to consult anybody to do that. And it applies in the same manner to the risk associated with that.
Okay. Thank you very much. Freda.
Sir, please, partnership
Partnership.
is where two or more parties agree to co-own or operate a business together, whereby each party either contributes their skill, their resources, their capitals, or their labor with the sole aim of making profit.
Great. Thank you very much. Any other? Okay. My next question is, what law regulates partnership in Ghana? What law regulates partnership business operations in Ghana? Uh-huh. Anybody to try? What law regulates partnership business activities in Ghana? Yeah, Freda.
Sir, please, the Incorporated Private Partnership Act 1962 at 154.
Okay. All right. Thank you. Thank you very much. So with this, I think we can move on with today's discussion, unless anybody has any question to ask. If not, we are moving on. So we started talking about incomplete records which are not completed. Businesses keeping records which are not completed, such that accounting professionals can base on it to help prepare their financial statement. We outline some reasons why some of these businesses don't keep records in appropriate manner to help decision makers. So here I want to find out, what are some of the reasons why businesses do not keep proper record? What are some of the reasons assigned to businesses which do not keep proper record, or businesses which operate incomplete records? Yes. What are some of the reasons accounting for businesses who do not keep proper record? Okay. Sumia and Frank.
Yes. So, sir, I think some business intentionally um don't keep full records to avoid tax evasion or to avoid paying taxes.
To avoid paying taxes. So intentional motive. Okay. Thank you.
Motive, yes. Yeah.
Michael. Michael AJ. Michael, your hand is up. Okay.
So this is Michael Daku.
Michael what?
Daku.
Okay. Michael Daku, yeah.
Yes,
Let's
sir.
go.
So, please, I think it may also be due to ignorance, to the fact that
Ignorance.
they may not be aware that they are supposed to keep proper records for their own business.
Thank you very much. Thank you very much. Any other? Mod Ankara.
Because of the size of the business.
Size of business. Okay. Thank you. Michael AJ.
Yes, sir. Probably due to the expensive nature of acquiring professionals.
Expensive nature of acquiring professionals. Thank you. And as Davor, the last one, then we move on.
Mostly people due to pay cash sometimes fail to record transactions.
We can't hear you. We didn't hear
Yeah, I
anything.
said sometimes maybe due to too much payment of cash, so people fail
Okay.
to record transactions.
Okay, to avoid taxes. Okay. Dema Gideon.
So at times, natural disaster.
Natural disaster can cause them to lose data. Alfreda.
Sir, please, informality. Some of the businesses are not formally organized, so due to that, they don't
Organized.
keep records.
Good, that's true. Wisdom, Kofi Archie.
Some to try to avoid audit issues. So
Audit
they refuse
issues.
to.
Okay. Keep proper record. Okay. Thank you. Now let's move on. Thank you. All that you said were part of what we discussed last week. Right. So we were looking at the approaches to account. A business that keeps incomplete records still must prepare its financial statement. And as accountants, we need to help them to prepare their financial statement. So we talked about approaches to the preparation of account. The net, that is profit determination. We look at the net assets or capital approach. So we were on cash book or income approach. So we said cash book or income approach. In this situation, elements of financial statement are determined via series of adjusting entries. So we adjust a host of figures in order to determine the actual possible figure to prepare the income statement. The net asset capital approach, this method of determining profit or loss is based on assumption that capital grows by way of profits and reduces by way of losses. So the maxim is that, or the axiom is that, if you start a business with 1 cedi, and at the end of the year, the money in your hand is 2 cedis, the only thing that can cause your 1 cedis to grow to 2 cedis is profit. And the same way, if you start a business with 1 cedi, and at the end of the year, your money out of the business is 50 pesos, then what it means is that you have made losses. So this is the net asset or capital approach to what? To profit determination. So here, the net asset or capital approach looks at the accounting equation, which says that asset minus liability is equal to capital, or asset is always equal to capital plus liability. In nutshell, net asset, that is when you take capital, when you take liabilities from asset, you arrive at net asset. So net asset is always equal to what? Capital. So profit are determined using the opening and closing capital via the preparation of statement of affairs. So here, to determine profits under this incomplete records, we prepare what is known as statement of affairs. And this statement, yeah, Michael.
Mr. Avevor,
Yes.
please, the first slide, which had to do with I think the income, the first one you put it into. If we could go back, please, the first slide. No, the first one. Yes, this one. You say the elements of the financial statement are determined via series of adjusting entries. I'd want to understand adjustment in what sense? Is it to, hide something, or I want to understand it clearly, please.
Okay, we've not done adjustment. That's why you're asking this question.
Oh, okay.
When we say adjustment, what it means is that, let me use a simple scenario. Your business has rented an apartment, and the landlord has taken 5 years rent advance, and you've paid. You are in the first year. How much will you capture as rent? In your cash book or bank account, it is stated the amount in the bank account is an expense, rent expense, for 5 years. But you have only consumed the first year. And so if you go into the account and you state the 5 years bill, you are overcharging your account for the first year. So you need to adjust your account to reflect only the first year. And the rest of the 4 years will go into your balance sheet as what? Assets, because you have not consumed that asset, that bill yet. So when we say adjustment is basically about determining the actual figure for the reporting period. Nothing more, nothing less. Do you get it? Another scenario is you have workers. You pay them at the end of the month. But as at 31st December as at 31st December year end, you have not paid salary. So at that point, the salary you have paid covers only 11 months. So in preparing your financial statement, even though you prepare a financial statement after you have paid the money, what we are saying is that as at 31st December, you have not paid your workers. So you have 1 month's salary in arrears. So in preparing your income statement, you need to add that 1 month's salary arrears to the 11 months to get a full 12 months, because they have worked for it and you need to pay them. So you are accounting for 12 months and not 11 months. So under accrual cost concept, excess payment must be taken out, and then payments not made but services received must be added to what has been paid. That is all we mean by adjustment.
Well understood, sir. Thank you very much.
Thank you very much. All right. Any other question? Any other person with a question? Okay, let's move on. So statement of affairs. We use statement of affairs when we are using the capital method to determine profit or loss. Perhaps we've already stated that. We said profit causes growth in capital and losses causes decline in capital. Take note of that all the time. All right, so this is the format for the statement of affairs. We pick the non-current asset, we add our current asset to get a total assets. Non-current asset plus current asset to get a total asset. Then we take out our liabilities. And here we are looking at non-current liabilities and current liabilities. When we take it from it, if there is no additional capital introduced, then the net asset is our capital. And that capital will now be used to go and determine profit or loss. So you can use this to determine the beginning capital of a business, and then use the same format to determine the closing capital of a business. Then you now compare the closing capital to the beginning. Now, if the closing capital is greater than the beginning capital, that difference is profit. But if the closing capital is less than the beginning capital, then that difference is losses. Am I making sense?
Yes, sir.
All right. Then we move on. We look at profit and loss determination. In the determination of profit or loss, using the net asset or capital approach, consideration should be given to drawings and additional capital introduced. Drawings. This has a tendency to reduce the closing capital and hence the profit. They are either added to the apparent profit or subtracted from the apparent losses. Now the question is, what is drawings? Who can help us? What is drawing? In accounting, when we say drawings, what does it mean? Yes. What is drawings? Asaridaku.
Yeah. So, drawings are monies that the business owner takes from the company account from time to time.
Takes from the company account from time to time for what?
So probably it depends on what exactly they want to use it for. So sometimes they could use it as an maybe allowance, or maybe they want to also use it for themselves, or I mean any other related expenses.
Okay. Right, let me see if I can get a colleague to add to what you said. Emmanuel Adai,
Hello, sir.
go ahead.
Good evening. So, in accounting, when we say drawings, it refers to a withdrawal of an asset. Basically, it's cash from a company's business or owner's personal account, or owner's personal use.
Go at it again.
So, it is a withdrawal of an asset. Usually, it's a capital. I mean, it's a cash or goods from a business-owned account for their personal use.
For whose personal use?
From the business owner's account for personal use.
For personal use. Okay. Thank you very much. All right. Let's hear from Juliet. Is it Juliet? No, Emmanuel Adai. Adai.
So I just answered the question.
Okay, so drop your hand. All right. Thank you very much. I think the two speakers are on point. So when we talk of drawings, it is a situation whereby the owner of the business takes money, either cash or withdraw from the bank account of the business, or takes goods of the business for personal or private use. Okay? And that is what is termed as drawings. And this drawings has effects on profit. The owner takes those money without replacing it, or takes goods without paying for it. Okay? Our mothers in the market, when they are selling and their sofumami is passing by, oh, sofumami, bra, 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 beji, nyama fakoye, banma sofumondi. Then they will pick the freshest item, heavy for sofumami. Sofumami will then say that Nyamishra will, she will not pay back, she will not put it back. Some also selling provision, suits, clothing. They will choose the best for Sofo and they will not pay back. When it happens like that, you have either withdrawn goods, taking cash, or anything worth the business own for your personal or private use. The business will treat it as drawings and it will go against the capital contributed in the business. Okay. So we are saying that where in the question you see drawings, what do? You add it to profits determined or you subtract it from losses. Okay. We move on. Now we have capital introduced. This is the effect of increasing the capital, the closing capital, and hence the profit. It has the effect of increasing the closing capital and hence increasing what? Profit. Meanwhile, capital introduced is not money that has what? Been turned around. Therefore, it is subtracted from the apparent profits or added to apparent losses. Because capital introduced in the course of the business has not been turned around. It is the beginning of the business capital which has been turned around till the end. So if you dealing with this question and you see capital introduced, what it means is that you have to take it from apparent profits or you add it to apparent losses. So this is the format for determining profit or loss using the approaches we've just talked about. Okay.
Sir, could you kindly go over the capital introduced again? Kindly, please.
Okay, Dame, your hand was up.
Yes, sir. Sir, can you introduce a drawings as capital or capital introduced by drawings?
I don't get it.
You take the capital introduced, right? You withdraw money, but at the same time introduce it as a capital into the company.
I don't know where this accounting concept is coming from. I don't still get it. Don't try to complex the issue for yourself, okay? Okay, damn it, don't complex the issue for yourself. Just follow what I'm saying.
Okay, I'm thinking like you can do drawings from your and introduce it into the capital, like to just make sure.
Drawings from where? Drawings from where?
Yeah, instead of your personal use, you invest it into the capital already that you are using to run the business.
How do you understand the word drawings in accounting?
Drawings.
How do you understand it?
So say, as in the case of you using the capital for a personal use, maybe you had wanted to withdraw the money so that money, instead of personal use, will be used to acquire something that will keep the company running.
So is it a drawing? If you have taken the company's money to buy something that will keep the company running, is it drawings? Is it drawings?
Probably it may or may not.
Master, you are confusing yourself. Unless you don't want to understand what is meant by drawings. Drawings has been clearly defined as the owner taking money from the business or goods from the business for personal use. So how can drawings be made and then be invested in the business? Then it is no longer drawings.
Okay.
All right. Yeah, there's a hand up here, Michael Asari.
Yes. Yeah. On the capital introduced, when you go for a loan from a bank, for the purpose of probably, of course, acquiring some assets for the company. Of course, it is a loan, but you are introducing this money into the company. So does it fall under capital introduction if you take a loan from the bank?
If you take a loan from the bank, what do you want to use it for?
Assuming you want to an asset, yes, sir.
So it becomes an asset on the books and then becomes a liability, which must be paid off.
Okay, so if I understand, you mean that capital introduced should be some sort of like free money. That's the money that has no strings attached, that the owner is introducing back into the company, right?
Exactly.
Okay.
And this is normally done by sole proprietor. So when we say capital introduce, you see, these sole proprietors, at times they will be in their shop selling, and somebody will bring something that is new that they have to sell. They might have not sold items that day, but he is having her own personal money in her wallet and will decide to what? To use that money to pay for the goods that have been brought. After selling, the right thing is to take that money from the business. But he or she will tell you, it's my own business. So it is my own money and I'm leaving it in the business. But when you ask him or her that, how much did you start the business with? He or she will not be able to account for that goods that she bought and paying from his or her wallet.
So it seems you are muted.
Maybe the system muted me. I'm saying that capital introduce is a situation whereby the owner takes money from the business, from his or her wallet, and puts into the business without accounting for it or without taking it back, but will not account for it as an additional money put into the business. So at the end of the period, because that person is not keeping proper record, at the end of the period, whatever profit that person is happy that he has gotten, it's not a real profit. He has put in additional money without knowing. So if you take it out, then the real profit will show. You might even be making losses, but because of that money put into the business, you will be making profits. So if he is able to tell you and you are able to knock it out, then the reality will dawn on him or her. Okay. Michael said what? I should go over. Michael, you said I should go over what?
I think, Mr. Ewa, the explanation you just give has it has done justice to my issue. I want to say that, Mr. Avevor, I think one of the greatest challenges sole proprietorship, business owners are facing is the issue of capital introduction, and then the other one, where we take out money without proper accounting, following due process, and then also we put in money.
Yes.
And it's like propping up. We prop it up to look good. But when you go into the cupboard, you realize that the skeletons there, it doesn't look that good. It's one of the greatest challenges we small businesses are facing. Yeah. It's very.
And Empirical Foundation once in a while organizes this literacy program for them. If you're an accounting person, you go to them that I want to help you straighten up your books. He or she will tell you, Master Frimeni Suko, I know how to handle my business. A lot of them are making losses, but they don't know. A lot of these sole proprietor business, they are making huge losses, but they don't know. And you know the painful aspect, these susu collectors, they do susu. So when it gets to their turn, they take it and they put it in the business. So when they are making losses, they don't realize it. They think that, oh, their business is flourishing. But sit down with them and go through copiously with them, and you realize that they are actually making losses day in, day out. And these susu collectors, you see them at the marketplace, they have bag hang on them. They come, they mark their books, they take the money. Anytime they need money, they are able to give them. So they are able to stay afloat. But they are actually making losses. Because when they need money to show up the business, they don't struggle to get it. So, Michael, thank you. What you are the observation you have made is perfectly right. And it is a challenge for these sole proprietor businesses. But all that they are happy with is they are able to go and come on daily basis. They are able to go and come. So they are good to go. All right. So our brother who is saying drawings can be turned into how do we do capital introduce? It is never done. You are not an accounting person, so listen to what I'm saying. Right. Let's move on. So guidelines to net assets or capital approach. What do we do? They said determine the opening and closing capital at the beginning and end of the period via preparation of statement of affairs. And we will do this. We will do this in our next 2 meetings or 3 meetings. We are going to deal with partnership workings, and then we will deal with this incomplete records. Trace all withdrawals made by the owners for their personal use, that is drawings. Determine whether there has been any injection of additional capital. Based on the formats of determination of profit or loss, see slide 13, determine the profit or loss of the business. So this is the format. So you use it to determine the profit or loss of the business. Okay. So this is the guidelines we are going to apply. Then we come to cash book approach. Cash book approach is where we do the proper accounting adjustment, where we have to adjust every figure. We take the figure, we read the additional information, and we will see whether the expense has been prepaid, whether the expense is in arrears, income has been prepaid, income is in arrears. We adjust to get the actual figure for the 12-month reporting period. Then we go and use it to prepare our income statement. So he said a full income statement and statement of financial position are prepared from the incomplete records provided. It is mostly used when a cash book could be drawn up, opening and closing balances are available and expenses incurred and revenue earned could be derived. So in this system, you have the cash book, which is the main expenditure book of the business, receipts and payment book of the business. Then you are also given opening and closing balances. So these three items are enough for you to determine the 12-month period actual figures, which could be used to prepare your financial statement. Okay. Guidelines to income or cash book approach. 1, compute the opening capital, that is using statement of affairs. Prepare your cash account to find the missing figures such as drawings, etc. So when you take the cash account, you are given all the figures. They give you all the figures, including the opening and closing balances. So what it means is that when you strike the debit and credit side, you cast the debit and credit side, the total should be the same. But where the totals are not the same, then the difference is what? Drawings. These are some of the knowledge you need to capture. The difference is what? Drawings made by the owner of the business. Okay. 3, ascertain credit sales using the trade receivable control account. We've not done that one. So that one, I will only teach you straightforward. Ascertain the credit purchases using the trade payables control account. Then ascertain the expenses chargeable to the income statement by making adjustment for accruals and prepayment. So these are the key issues we'll be dealing with. Then the 6th point, you then prepare your income statement and determine your profit or loss. Now, how do you determine the missing figures in the cash book? Drawings, cash received, and cash paid. Where receipts are more than payment, it is likely that the missing figure is cash drawing or unrecorded cash payment by the owner or by the business. It could either be drawings made by the owner or unrecorded cash payment made by the owner. NB, in the absence of additional information, such a difference should be treated as drawings. In the absence of additional information, any payment, any cash book where the payment is less than the receipt, then you treat it as what? Drawings made by the owner. Where payments are more than receipts, it is likely that the missing figure is cash receipt from customers. Take note of these two statements. We are now going into proper accounting. The level 100 one we did is just an introduction, encomiums. We are now into proper accounting. Right. So you have activity that we have to deal with, and that will come to it later on. Any question? Any question?
Hello, sir.
All right.
Sir, please. Sir, please, can you go back small for me?
Go back, okay.
Yes, I want to ask a question from where you say it should be treated as drawing.
Okay.
Yes. So, sir, in this case, if you are to be treated it as a drawing, because of maybe you cannot find exactly where this tray, whether it's from the drawing, the cash receive or cash pay, the figure. So if you treated it as drawing, so now how are you going to account for it?
Yeah.
Or it means that you are trying to say that the owner has withdrawn that money, or he has used
The
that
owner, yeah,
thing for his own the business, his own
personal use.
personal use.
Yes. Thank you. Exactly what we are saying. You see, these sole proprietors, they don't record their transactions, but most of the information are in their head. But it is not all that they can remember. So when you prepare the cash book and the payment side is less than the receipt side, and you go to the additional information and there is no information there telling you why the payment side is less than the receipt side, treat it as drawing. Take it that the owner was siphoning the money for his children, her family, himself, but did not record it. Simple and clear.
Thank you, sir.
You're welcome, Randolph. Yeah, that one, Michael.
Yeah. Sir, is drawings legal for a business owner to do? As I'm asking this question because of the word you used, the owner is siphoning the money from the business. So I just wanted to find out if it is legal for a business owner to draw from his or her business.
100% legal. It is 100% legal. But do you know the end effects? Do you know the end effect?
Yes, sir. You mentioned that it reduces the capital of the business.
And then the final effect will be what?
Losses.
And the final effect will be what?
The collapse of the business.
Collapse of the business. Cast your mind back in your community. People who have started provision businesses, people who have started businesses, and today they are not able to continue. It's as a result of some of these things. Drawings without they knowing. It is that business that they feed the family from. It is that business that, even, let me show you this. Those who run this transport business, taxi business. It is that business, taxi business, that feed the family, that pay rent. So the moment the taxi engine has problem, the next thing will be what? They will jack it on a stone. It cannot continue. The same thing applies to most sole proprietor businesses. But our mothers and sisters at the market, if you interview them, a lot of them have a lot of loans from credit unions, from a microfinance, from susu collectors. They have a lot of loans hanging around their neck. But because they are able to go and come on daily basis, they are happy. So that is it. It is a legal business activity, but the end effect is collapse of the business. Yeah, Kofi Archery.
And sometimes do some of the shops or shops, so what make them like inconsistent record keeping. Sometimes people do go there to buy things and they tell them to inflate the prices and forgetting that maybe their receipt that they are using is carbon receipt or whether they didn't even remove it from inside. So when balancing the account sheet, sometimes it creates problem. Or
A great problem for them, yes. Some of them are also involved in dubious transactions. Agree. Oh, yeah. Any other question? I've not prepared my question. Other than that, would have taken a question right away. So without wasting this time, let's take another slide. Can we? So cost rep, we have partnership to deal with, and we have incomplete records to deal with. And cost rep, remind me in the course of the week, remind me so that I prepare something on adjustment for you. So we'll handle that adjustment too. We'll do all on Zoom because our face-to-face meeting are very scanty. Yes, Kofi Archery.
So please, the slides, they are not on the LMS.
You don't have it. I'll share it with the cost rep today when we finish. I've not populated the LMS. I'll do that. But if I can't, until I do it, you cannot stay without reading slide. So I'll share it with the cost rep on her WhatsApp to be shared with you whilst I take my time and populate the LMS platform. Okay?
Yes, so together with the last week slides.
Yeah. I'll do that. And the course outline, I'll do all that. When we started and I was asking any question, that was the first question I was expecting you to ask me. So I said, we don't have the slides. What is happening? Anyway, is it because of Mr. Avevor? That's why he didn't ask.
Probably so.
I'm a changed person, don't worry.
Hey, hallelujah. This one, they're bigger.
Right, let's take the next slide so that we can be in tune. When we are doing the calculation, we just move straight in. Okay, so we want to look at accounting for non-profit making organization. When we say non-profit making organization, what comes to mind? What do you know about non-profit making organization? And what are they? What are non-profit making organization? Mike?
Okay, sir. So just by the name, suggest the main objective is not to make profit.
Okay.
So, for example, today in one of the courses we looked at state enterprises or public enterprises. Okay. So they are there, they are doing business, but the objective is not to make profit. So that at the end of the day, recently there was an issue with CocoaBoard. Yeah. And it had to do with them making, is it CocoaBoard or Goldboard? Goldboard, good. And the issue was that they made huge losses. Yeah. And somebody came to the defense that no, we are there not to make profit. So once we break even, we are on track. Yeah. You cannot hold us that we should have made profit of this margin and we didn't make it. So we say we are making losses. So they are there, but their business is not to make profit. Yes.
Thank you very much, Michael. All right. Any other contribution? Yeah. Who is this? Mod. Mod.
So they also do not have owners, like they don't have CEOs or
Hey, are you sure? Are you sure?
Yes.
Hey, check well. They do not have owners. Non-profit making organization.
Yes,
check well. Mod, check well and come back again. Who is this? Gilbert.
Thank you. Yes, sir. Sir, please, they are mostly managed by the government. They're mostly managed by the government, and they are mostly concerned about the people's welfare, the public's welfare.
Okay. Are you sure they are mostly managed by the government? Okay. Government also manages some. All right. Thank you, Gilbert. Who is this? Emmanuel Adai.
Hello, sir. Sir, can you hear me?
Yeah, speak up a bit.
Okay.
All right. So instead of distributing their the surplus to the people or the shareholders, they reinvest it into the business or the organization again.
Thank you very much. Thank you very much. Who else? Who else? Who else? Any other? Hey, Adai has spoken. Richmond.
Okay, sir.
Ajemfra.
Sir, they act as a regulatory body, as in the form of
Non-profit making
controlling.
organization.
Yes, please.
So you are still hooked on to the public sector, isn't it?
Yes, please.
Okay, thank you. Let me hear from another person. Kofi Atri.
Mostly, they have their peoples at heart, like the NGOs.
NGOs, okay. Example of an NGO, they have the people at heart, the people's welfare, isn't it?
Yes, sir.
Yes.
Okay. Kofi, go ahead. Example. Example of NGOs, non-profit making organizations, sorry.
World Health
NPOs.
Organization.
Come again?
World Health Organization.
World Health Organization. Thank you. That's a typical example. Any other?
MasterCard Foundation.
MasterCard Foundation. If I don't call you and you talk again, I'll deduct mass. MasterCard Foundation. MasterCard Foundation. Thank you. Who is this? Michael Asari.
The Mahama Cares Program.
The Mahama Care Health Foundation. Thank you. Richmond, Ajimfra.
UNICEF.
UNICEF, that's correct.
Yeah.
Mod.
The churches.
Come again?
Churches.
Churches. Yes, churches and mosques in Ghana. That's correct. What again? Emmanuel Adai.
So USAID.
USAID. That's correct. Okay, very good. You have a whooping idea about non-profit making organization. But don't forget about your old student association, your alumni association, your tribe association, your Keep Fit Club, your whatever club. They are all non-profit making organizations. If you join this organization, what do? They seek your welfare. Apart from churches, who doesn't seek the welfare of its members? All that they do is to take members' money. And when a member is in need, they tell you God will provide for you. But when they need it, we have to do pastors' appreciation, we have to do special collection, all these things. But if you join your old student association, you pay your contribution. When something happened to you, they will also come together to support you. Me, my church that I attend, if you are not in any association, forget it. And I'm good with it. Let's move on. Okay. So the government institutions, as you rightly said, true, some are regulatory agencies. They are there not to make profit, but they are there to seek our welfare. They are there not to make profit. That is how come when you take the security agencies, they are all controlled by the state. When you take most hospitals, they are controlled by the state, but the state allow private entity to enter. So when you compare the fees that the state charges and the fees that the private hospitals charges, there are vast difference. The fees that public universities charges and the fees that private universities charge, there are vast difference. So that is it. Okay, let's go into what I have here. Business organizations exist primarily to make profits and to provide appropriate returns to its owners. However, there are some organizations whose purpose is to provide services to the public and its members. Such organizations are not intended to be profit-oriented. This session seeks to differentiate between profit and non-profit oriented organization and how to account for non-profit making organization. Using. So there are two streams of businesses. One is interested in making profit. One is interested in not making profit, but render social services to its clientele base. Okay. So by the end of this session, you should be able to explain the main difference between financial statement of NPOs and profit-making organization. Prepare receipts and payment account, the income and expenditure account, and the statement of financial position of NPOs. Calculate profit or loss for special entities of NPOs and make appropriate entries regarding subscription, life membership account. So when you look at the last batch one, it said what? Calculate profit or losses for special entities of NPOs. Now, let's take a typical organization like government hospitals. A government hospital, then they operate canteen services. That canteen services that they are operating is not part of their core mandate. It is not part of their core mandate. So that canteen services that they are operating, it is a profit motive venture. So in preparing the financial statement of the hospital, when it gets to the canteen account will be prepared as a profit or loss entity. Churches, the offering, the dues, the Kofi Nama, the pastor's appreciation and all that we do, it is what? Accounted for under non-profit making. But the church has what? A canteen where they sell refreshment. The church has what? A bookshop where they sell books to the members. The church has what? A boutique where they sell dresses to the members. That one is a profit motive. So those activities will be accounted for separately under profit-oriented business, while the church offering and the rest will be accounted for under non-profit making organization. So take note of these two. So look at a financial statement of NPO, receipts and payment account, income and expenditure account, statement of financial position, sources of funds for NPOs, sources of fund of NPO, and then membership subscription. Now, when we say NPO, what does that mean? Organizations whose main purpose is not trading or profit making. NPOs, they are not into trading. Examples you gave, the United Nations, the UNICEF, the MasterCard Foundation. Do you see them doing buying and selling? No, they don't do buying and selling. In Ghana, some of you have heard of Rotary Club. You have heard of Lion Club. True of us?
Affirmative.
Hello? Eh?
True, sir.
Yes, sir.
Yeah. And you've also heard of Full
Yes, sir.
Gospel, Businessmen's Fellowship. All these organizations, do you see them doing buying and selling? No, they don't do that because that is not why they are set up. So where do they get their money from to sponsor projects? Where do you think they get their money from? Yes. Yeah, switch over.
Sir, please, through donations and sometimes fundraising.
Through donations and sometimes fundraising. What again? Are they?
I was putting my hands up. But they do contributions among themselves to help
Exactly. They do contributions. And those of you who attend churches, they said what? Registration fee. Then the next one is what? Dues, church dues. Your tithes, your offering, your collection does not make you a member. Hello? Your tithes, your contribution, your whatever does not make you a member. What makes you a member is your what? Your registration. And after registration, what makes you a member in good standing is your annual church dues or monthly church dues. That makes you a member. My church that I attend, tithe is not compulsory by force. Nobody's name is written to come and pay tithe. They only say the month has ended. Those who want to pay tithe should take the tithe envelope and put their tithe in it. That's all. But as for the church dues, monthly dues, which accumulate into yearly dues, that one you have a book that will record in it. But my church, they don't record tithes in your membership card. No. What they record is your church dues and their harvest dues, and maybe special contribution. That's all. Your tithe, nobody cares about it. So far as you pay your church dues, you have registered and you pay your church dues, you can decide not to pay harvest dues. When something happens to you and they have to come and perform something from the church, not donation in terms of money. Let's say you passed on and they want to bury you. The first thing they will ask is, has he been paying church dues? If you pay, then they will conduct your burial service for you. If you are in an old student association and something happened to you and they have to attend, the first question they will ask is, has he been paying dues? Is he a member in good standing? If he is not, then the coming will be voluntary. If he is, then the coming will be compulsory, where the association will sponsor it from our dues. Right. Let's move on. The main financial statement prepared by these NPOs are receipt and payment account, income and expenditure account, statement of financial position. Now, when we say receipt and payment account, what is it? It is the summary of the cash book for the accounting period. So the receipt and payment account is just the cash book. It has the debit and the credit side. It has the receipt side at the left-hand side and the payment side at the right-hand side. Adain.
So there is a question in the chat.
Okay, let me go and look. Read it for me.
So far as professional bodies so far as professional bodies are concerned, then schools can be classified as non-profit organization. That's a question of mistake.
Public schools. Let's make the clarification word. Public schools. All
Okay.
public schools are non-profit making organizations. GCTU is a non-profit making organization.
Okay.
But private schools are profit making organizations. That is why at the end of every year, they have to file their returns with the Registrar General's Department and pay their taxes, corporate tax. Public hospital, private hospitals, they are profit-making organizations, but the government ones are non-profit making organizations. All right. So the receipt and payment record cash receipt and cash pay. If the organization does not have other assets apart from cash and liabilities as well and does not intend showing the income and expense differently, it will be enough to account for all financial transactions that has taken place in the period in the receipt and payment account. So where the business does not intend or it doesn't have any asset again, and they have not intend to show additional account, then the receipt and payment is enough. Some of you are treasurers and financial secretaries of your associations. True or false? Some of you are treasurers. They elected you as treasurers or financial secretary of your association. Yes. And what do? All that you do is to collect dues and then make payment. At the end of the period, if they say you should come and account to them, you go and tell them, in the year we collected 500,000 and then we spent 300,000. The balance is 200,000. It's in our bank account, period. That's all. Okay. So this is the format for the receipt and payment account. Cash and bank opening balance, members' dues that members pay is recorded at the debit side. Donations received. Some members will make donation. Some organizations will make donation. Some government institutions will make donation. Keep it clubs. Bar takings. Some of these organizations operate drinking spot, drinking bar. Those of you from Takrade, a typical place like Takrade Tennis Club. Those from Takrade, do you know Takrade Tennis Club? Any students? Okay, it means in this class, I don't have any student from Takrade. Let's move on.
Say Beach Road.
Oh, we are here.
You're not there. Do you want me?
Say Beach Road. How about this sports club, Beach Road? Yeah.
You want me to beg you before you respond? So I don't have any student from Takrade. Let's move on. So when you go to Takrade Sports Club, their main activity is to go and play tennis and then play golf. But what do? At times they organize funeral receptions over there. And they have a clubhouse. So for the tennis playing and the golf playing, members pay dues to keep the lawn and to keep their operations. But the bar, where they sell the drinks and the rest and the snack, that bar is operated based on profit motive. So anything that the bar sells, the money the bar makes, it is put in the coffers of the club. Any losses that the bar make, it is given to the club to pay. So bar takings or bar sales, money made will be debited to the receipts and payment account. Rent received. You remember I said Takwari Sports Club, what do? They give the place for people to host their wedding reception. They give the place to people to host their funeral reception. They give the place to companies to come and play their golf, play their tennis, and they take money from them. That is the rent we are talking about. Then at the payment side, we have barman's wages. The one operating the bar, they have to pay him or her. Then we have clubhouse expenses, cleaning of the place, maintenance of the asset, and all that. Honorarium. Honorarium is paid to the board of the club for availing their professional expertise to help the club to run. Utilities, of course, they will pay light bill, they will pay water bill, and all that. Donation. As the club is receiving donation, the club should also give out donation. The country Ghana, we always receive until when Kwame Nkrumah became the president, he decided to make donation to Guinea, to Japan, and the rest. Because of Kwame Nkrumah's donation to Japan, that's why Japan would never give Ghana loan, but rather grants. Japan will always give Ghana grants, not loan. Then Atamels also came and make donation to, is it Jamaica? When a disaster strike, and Mahama is also continuing. He has made donation in terms of military support for the earthquake-ravaged country, Caribbean country. And then they have also donated some cocoa products and other confectionaries to the disaster victims in Palestine and all that. So whilst we are also receiving donation, we also give out donation. So clubs and society, they also do that. They receive donation from corporate organization, and they also do donation to members, to outsiders. Okay. Now we come to the income and expenditure. We are done with the receipts and payment. The income and expenditure accounts for non-profit making organization used to assess the growth or otherwise in its capital termed as accumulated fund. The income and expenditure account is prepared with the same principles as the normal income statement for trading organization. So just as we prepared the profit and loss account, we also prepared income and expenditure account. So all sources of income put together and all expenditure of the association taken from it. The difference will show either they have made surplus or deficit. It is prepared with the same principle as normal income statement of trading organization. Only revenue receipts and revenue expenditure are considered in the income and expenditure account. Only revenue receipts and revenue expenditure are considered in the income and expenditure account. Capital receipts and capital expenditure goes into the statement of financial position. So here the question is, what is revenue, expenditure, and revenue receipts? And what is capital expenditure and capital receipts? I come to you now. What is revenue, expenditure, and revenue receipts? You explain with example. Then what is capital expenditure and capital receipts. There we go. All those responding to question, I'm taking note of it. If you like, don't talk. If I call you, don't talk. We are here. Let me see. Let me go to the bottom and see who is there. Lourdes, what is revenue receipt? Any of the receipts I've made mention of. Lourdes. Lourdes is not in class. Maud.
Hello, sir.
Go ahead.
Hello, sir. Please, my background is noisy. That's why I'm on duty.
That's Lourdes, eh?
Yes, sir.
Okay. All right. Thank you. You can put your response in the chat, okay? Yeah, Maud, let's go.
The revenue expenditure is the money spent on day-to-day running of the business.
Day-to-day running of the business. Thank you. Example. Give us 3 examples of a revenue expenditure.
So when we talk about the rent and electricity bill,
Mm-hmm.
and salaries of your workers,
Mm-hmm. Last one.
then maintenance.
Maintenance costs. Okay. Thank you very much, Maud. Okay, let's move on to Michael A.J. Michael.
Okay, so I'll go with the revenue receipt.
Revenue receipt. Go ahead.
Yes. So that would have to do with the income the business receives.
Okay.
For its operations. For example, the business is in the operation of selling of goods. So sales of goods could be, revenue receipts, please.
Perfect. Thank you very much. Thank you very much. So we go to capital expenditure and capital receipt. Okay. Capital expenditure, capital receipt. Michael, drop your hand. Let me go down here and see if I'll get Timothy. Timothy has not spoken for some time now. Timothy.
Hello, sir. Please, my background is not good. I'll put my answer in the chat.
Yo, I hear. I'm expecting your response in the chat, Timothy. Okay. Then we have Homofa Collins. Homofa Collins.
Sir.
Go ahead. Capital expenditure or capital receipt?
Sir, capital expenditure.
Good. Go ahead.
It's the money that they spend to buy or improve long-term assets.
Spend to buy or improve upon long-term assets. Example.
Sir, example like buying land or building.
Buying land or building. Thank you very much. Thank you very much, Collins. Okay, then we go to capital receipts. Collins, thank you. Let me see who is here. Capital receipts. Tracy Kumson. Tracy Kumson. Tracy Kumson. Okay, Tracy is not with us. Let me go to Richard Tay. Okay, Tay is gone. Let me go to...
Sir, please, I'm here.
Okay, go ahead.
Thank you. Capital receipt is the cash that is part. That is not part of the regular earnings from the company. Yeah. So like loan.
Loan.
Yes, please. Bank loan.
Bank loan. Okay. That's a capital receipt. Okay. Any other capital receipts? Any other? Let me go down here and see. Is somebody's hand up? Okay, 2 hands up. Bismarck Oman.
Yes, sir.
Bismarck Oman.
Capital receipts, they are funds received by business that either create a liability or reduce the value of assets.
Create a liability or reduce the value of asset. Good. Can you give us the one that creates a liability and the one that reduces the value of assets? I think the one that creates a liability, this guy has told us.
That is the bank loan.
That's the bank loan. Perfect.
Yeah.
Okay.
And the asset is money received from sales, from fixed assets.
Sale of fixed asset. Perfect.
Yeah.
Thank you very much. Thank you very much. All the responses are on point. Thank you for doing justice to those responses. Okay, so let's move on. Then let's look at differences in the terminologies used when it comes to this business operation. So profit-oriented organization, and then its equivalent in non-profit oriented organization. So in profit-oriented organization, we have income statement. When you go to non-profit making organization, it is termed as income and expenditure account. Income statement. But when you come to non-profit making, it is what? Income and expenditure account. In profit-making organization, it is called cash book. When you come to non-profit making organization, it is called receipt and payment. Receipt and payment account. Net profits in profit-oriented organization, when you come to non-profit making organization, net profit is known as excess of income over expenditure. Excess of income over expenditure. Let me add it to it. Excess of income over expenditure. Okay. Then expenditure. Oh, sorry. Excess of income over expenditure, which is also known as what? Surplus. Which is also known as surplus. Then we come to the next item, net loss. Net loss. When it comes to non-profit making organization, it is known as excess of expenditure over income. Excess of expenditure over income. Therefore, known as what? Deficit. It is known as deficit. Deficit. So net profits in non-profit making organization is surplus. Net loss in non-profit making organization is deficit. So choose the one you want to use. Capital in non-profit making organization is what? Accumulated fund. Capital in non-profit making organization is known as accumulated fund. This is the format for the income and expenditure account. You list all the income of that business, and then you list all the expenditure of that organization. So the total income minus the total expenditure will give you either surplus or deficit. It will give you either surplus or deficit. And a example of income of a non-profit making organization are subscription. When you go to churches, the subscription is your the church dues. When you go to old student association, the subscription is what? Your dues. When you go to your tribe association, the subscription is your what? Membership dues that you pay. Then profits from bar operation. So the bar that they operate, the profit they get. Then donation. And this donation is what? Donation received. Donation received. Then you find the total. Then you come to expenditures. You have stationery, that is the membership dues book that you buy. You have donation. The association also make donation to children's home, leprosarial home, how do we call it? Aged homes and all that. Then other general administration expenditure. Okay, so these are some of the examples. Then we come to receipts and payment versus income and expenditure. Receipts and payment records both capital and revenue expenditure. Income and expenditure records only revenue expenditure, whilst capital expenditure goes to the statement of financial position. Take note of that, don't forget. Receipts and payments account has an opening balance. Income and expenditure account does not have opening balance. Receipts and payment account is the cash book of the business organization. Income statement, income and expenditure account is the income statement of the organization. So take note of this petty issues. Receipts and payment account record all cash receipts and expenses paid, irrespective of whether it's a consideration, it is a capital or revenue expenditure. Income and expenditure records only income and expenses relating to the period under consideration. Wow. It records all cash receipt and expenses payment, irrespective of the consideration. It records only income and expenses. Okay. Only income and expenses relating to I have to do something to my slide before I send it to you. Okay. All right, let's move on. It record only income and expenses relating to the period under review. Okay, right.
I think your font is white. That is why it's not showing.
Okay. I'll correct it before I send it to you. Okay. The difference in the cash is the cash balance, cash and bank balance in the receipts and payment. The difference of the two sides is the cash and bank balance for the period. The difference is the excess in the income and expenditure account. The difference between the income and expenses is the excess of income or expense at a time over expense or income. That is, it is either surplus or deficit. It is a real account. The cash account is a real account. So the receipts and payment account is a real account, whilst the income statement, the income and expenditure is a nominal account. So you can Google and find out the difference between find out what is a real account and what is a nominal account. Okay, right. So I'll edit this part of the lecture slide before I send it to you. Okay. Now, sources of finance for non-profit making organization. We have membership dues, annual subscription, fundraising activities, special fundraising, programs like dinner dance, donations, trading activities of special entities such as special entity as supplement. Example, running a bar or restaurant to supplement the income of the association. And on that note, we'll draw the curtains down on what we have discussed so far, and then keep this side as the next topic to be dealt with in our next meeting. So the next 2 minutes, any question, any concerns, anything you want to ask before we go away? The
Hello,
floor
sir.
is yes. Wisdom.
Sama is a personal question.
Okay.
Now you were saying your church, so please can I know the church that you attend?
No. I won't tell you my church.
Thank you, sir.
So we want to follow you to church, that's why.
Tofiakwa.
Because your church, I can see they are good. They are good. You keep mentioning their names, so want to come.
Me, I'm just a church goer. So you, the church you attend, appreciate it and do what they ask you to do. It's okay. If you don't attend church too, that's fine. That's fine. All that you need to do is to do good. That's all. Okay. Any other question apart from the church question? If not, we say goodbye to each other till we meet next week. And course rep, remind me to share questions with you so that somebody said next week is face-to-face. Is that correct?
The following week.
Next week.
That's next week. Is it next week?
On the 21st.
21st. So next week,
next 2 weeks.
We'll start our calculation on Zoom. So please, course rep, be on my heels to share the questions with you, okay? Course rep, is that clear?
Yes,
okay. So on that note, if there is no question, can someone move for the adjournment of the meeting for today?
Okay, so I will move.
Okay, any seconder?
I
second the motion.
Thank you. So stay blessed. Enjoy the rest of your lectures today and tomorrow. God willing, we'll meet next week, okay?
May the Lord be with you.
Thank you, sir.
Amen. Amen. Bye-bye.